The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks, to the Money Masters Show. The Dow is up 77 points right now. S&P's up 6, composite down 5, led by Apple to the downside, but it's got some competition to the upside. Small caps having the best day out there, up 0.7%, up $6.50 right now. Microsoft having another stellar day, up 39 ticks right now. That's up 1.5%. Intel up 2 pennies. Of course, we know the semiconductor industry or sector is struggling out there. Google up about $10 right now, up 1 4/10%. Apple down 9%, almost 10%, I should say, down $51 and change. Our call number is 877-927-6648. Let's start off by taking a look at the S&P 500 out here. It's up over the $1,500 mark, trading right now at 1501.11. So let's go take a look at it and see what she is doing. 1503.11 happens to be the 1-to-1 A to B equals CD. So that's what it, it's almost up there. That's what it wants to tag. Again, you don't see the bears. They're nowhere in sight here as we take a look at the candle formations. And we can see here price along that C to D leg, which is stronger than that A to B leg out there of an A to B equals CD up. It says that it still wants higher price out there. Where's that higher price? Well, it's that 1.272 butterfly that it is going to head to. We take a look and see what that price level is. That's the 1510 mark. At 1510, it will form a 1.272 butterfly. Does it have to stop there? No. Is it an extreme overbought condition? Absolutely. Does it say caution? It most certainly does. Does it say to jump in on the long side? Absolutely, positively not. Do not do that. You want to go ahead and you want to buy when the relative strength indicator, that's what you're seeing at the bottom of the chart, is down towards the bottom of it, and you want to be taking a look at selling when it's up towards the top. But what is it that you need as your triggers to buy and sell? Is it enough to just be able to hit the upper boundary or bottom boundary of that? Absolutely not. No, you need other patterns out there that are completing. Now, in this case here, it could be a 1.272 butterfly, and then all you have to do is wait one more session. You got to wait for that confirmation that, in fact, you see a reversal out there. You don't have to, but I think you are better off doing that because these patterns that we're looking at, they're longer-term patterns out there, and there is no reason to, if they're going to reverse, you don't have to try to sell the top tick, nor do you need to try to buy the bottom tick out there. Just use wide enough stops. So the S&P headed to the 1510 mark. If it doesn't like that area and it wants higher price, even though it is overbought, the next level, the 1.272 A to B equals CD, up at the 1531 mark. All you have to do is you'd be sitting back, being patient, taking information, because the bulls and bears, they just can't hide. It's impossible to hide. They have to show their heads out there. So that is in the S&P 500. Now let's go take a look at the Dow and see what the Dow is doing out here. Other than moving higher, the Dow trading out at the 13,381 level. So let's go look at that stock chart as we take a look at that C to D leg in that in the A to B equals CD up. You can see strong. You can't see any bears out here. Really no bears other than the ones that showed up at the party back in the December 19th time frame, moving down into the C point that had formed on December 31st out there. We take a look at the level. So it's above. Yesterday it made the 1-to-1 A to B equals CD. That price point was, it really closed on it yesterday at the 13,779 level. Now, what's the next levels out here? Well, the S&P, we took a look at where that 1.272 butterfly is. The 1.272 butterfly on the Dow is basically going to take into the 14,000 area. Looks like 14,023 is a 1 to 1.272 A to B equals CD up, and underneath that around the 13,974-ish range is your 1.272 butterfly. That's an expansion. So I'm using when I take a look at 1.272, I apply it, folks, to two different things. Number one, I apply it to the expansion of swing points, and that is really your September 14th high down to your low on November 16th in the Dow. Also, when it's forming an A to B equals CD, I take a look at the 1-to-1 level because we know that historically, 60% of the time, that's what a market do. That's what an equity does. That's what a currency does. That's what a futures contract does, 60% of the time. The question is, you need to be that treasure hunter to understand what happens the other 40% of the time. Well, the other 40% of the time, it's going to shoot to additional ranges, which are expansions of that A to B leg. That could be 1 to 1.272. Sometimes people use 1 to 1.382. That's fine. It could be 1 to 1.618. It could be level 2. It could be 2.618. The final level, which would be an extreme move, would be pi. 3.14. So each of those levels are identified on my system, on my formation tool, and I suggest that you have those levels identified as well and learn to be able to identify reversal candlestick patterns out there before you put your money at risk. Just because you have reversal, does that mean that it's over? No, you always still need to use good money management. Hey, let's go take a look at the currency market. Then we'll come back to the indexes. And let's take a look at the Japanese yen. You know, Japanese yen, you had the finance ministers, the Bank of Japan met on Tuesday, I think they released the information that they were ready to buy unlimited assets out there. Well, sort of unlimited and sort of buy assets out there, meaning that they're going to supposedly start that in January of 2014. We did see some bearish reversal candles out here as the yen made a high out on January 21st out at $90.23. You're having a strong session today. You're actually getting a morning star pattern out here, 3-session candle pattern. So we've got resistance and we've got support in the small little block of trading range. The support now being the low of yesterday on the yen on the daily chart being at the 88.05 level out there. So still you would use smart money management. If you were short the U.S. dollar Japanese yen, you would have a stop somewhere above the $90.23 mark out there. But you want to be paying attention to reversal patterns. We'll go back to the, let's go check in on Apple, then we'll go back to the indexes out here as we take a look at Apple trading out at 459.38. It had really good volume come out of this thing at the open here at 9:35. That first 5 minutes you saw 8 million shares dumped in Apple, getting into extreme oversold territory. It's got to work that way. It's got to work its way off, and that's in essence what it is doing. What the market is showing you is one stock doesn't control everything out here. And so that's important to understand. You know, if you were short Apple, yeah, that's the right move. Even being in the Qs or short the Qs, that at the moment is the right move. And we'll take a look at the ETFs out there as well. You need participation from its brothers and sisters, meaning the SPYs, the IWM, the Russell 2000, I said the IWM, and what did I miss? The SPY, the diamonds out there. Thank you. Lucy in the sky with diamonds, as well as how about the New York Stock Exchange. So you need some confirmations coming from those areas as well. Let's go back to those indexes. Let's finish those off for you here in this first segment as we take a look at patterns that are underway and look for the bears. We got the New York Stock Exchange, the weekly chart out here, and that is making a move above this little 3-drive pattern. Let's go ahead and actually take a look at an expansion of a larger set of swing points. Let's come from the swing point high of March 23rd out here down to the low. So March 23rd high in the NYSE out at the 83.27 mark, down to the low put in on June the 8th, above the 1.272 expansion of that. Where's 1.618? Boy, it seems like it's way up here, right in the 9,000 level, and it's at 88.76. 90.10 is that number. If we draw a pattern, let's go see what that pattern would look like. I'll use this little pattern tool that I have out here, which is a beauty. And let's go see what that looks like out here. And that is what we would be looking at. So that would now turn it into a 1.618 butterfly up at the 90.10 level. Again, the New York Stock Exchange right now trading at 88.75. And we should see a reversal, perhaps, well, I'm not going to say we're going to see a reversal. The bears are just simply going to show up, and that's when we'll see a reversal. It's as simple as that. Now, that was the weekly chart of the New York Stock Exchange that we were looking at. So we've done the S&P. Let's go take a look at the index. That's an important index for us. Today, we've got an abandoned baby top by one of the most rare Japanese candlestick top patterns out there that you can form. Of course, the session is not over. And should the NDX 100 today get up to the level of 2756.59, we will not have that rare candle formation of that abandoned baby top. They are hard to make. They require a doji at either the top, or in this case here I'm calling it a top, so well, I'll just use that terminology. That requires a doji candle, which is what we had yesterday in the NDX. By doji, I mean it opened at 27.62. It closed at 27.62. Out there. So you got a doji, an open and a close. Intraday, we had a higher high and a lower low out there. You can see it was a gap up as well yesterday from the January 22nd session. And today, you had a gap down. Right now, what the NDX is doing is traveling back inside this sideways consolidation area that I have been traveling in for several sessions. Now, what we have going on here is we've got the competition of the islands. That's really what is underway with regard to the market, because you've got another island reversal right here. I'll go ahead and highlight that for you so you can see what that is. That is this set of candles right here. The abandoned baby top, that's a one-day session that we've got out here. But as you take a look at the sessions where the New York stock, the NASDAQ 100 gaps down on December 21st. December 20th, your low is 26.79 out here, gaps down on that very next session. In fact, stays down here for a while. And then what we know is on January 2nd, we came back to begin the new year, you had a gap up. So you got this little island that was created. So you got a reversal bottom pattern out here, which should act as a support level. And now we've got a reversal signal at the top. So what is the trading range? Well, trading range is really all the way down. This area here has not been tested. When I say test, I'm talking about getting back to the December 31st area. But the lines really have been drawn in the sand when it comes to the NDX 100 out here. Of course, today's abandoned baby top is not yet officially formed, not until the end of the trading session out there. So let's see, we did the Dow, the S&P. That means we've got the small caps left. Let's go take a look at the small caps. The small caps trying to power up and above. Well, they have powered up and above the 1.272 expansion area. That's where they traded into yesterday. Geez Louise. The 1.618. Is it really going to make an attempt and try to get up into the 933 level? Well, you can see that the small caps, Russell 2000, in that extreme overbought condition. Don't chase it here, even if that is where it is headed to. At least I suggest that you don't, unless you're an intraday trader or something. Then you're going to play some different patterns out here. We know that things are stretched. We're just waiting for the bears to go ahead and paint some signs out there, but they are not around. They must be vacationing. Can't be down here in Florida, because it got downright cold last evening. Of course, in the days are pretty nice out here, but I don't like it when it gets below 70 degrees out here. So the bears, where are they vacating? They must be down in the island somewhere, because there's so many island reversal patterns that we've got out here. So maybe they're trying to make their way back, but they have not made their way back here just yet into the markets. Let's go take a look at the ETFs for you. Let's start off with the Qs. You can see that same abandoned baby top in the Qs. The Qs opened yesterday at 67.56. They closed at 67.59. That's a doji out here. You can see you've got the gaps between the trading session of the 22nd as well as today. So an abandoned baby top in the Qs as well, but then you've got this little island right down here, just like on the NDX 100. The lines have been drawn in the sand. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 64 right now. S&P up 4. Composite down 7. Small caps up 5. And, folks, if you are in the Denver area, February 2nd on Saturday from 8:30 to 12 at the Marriott Tech Center is going to be Tom and Daryl Martin from 8:30 to 12 noon. Dynamic trading strategies. It is free to attend. Go to the homepage of TFNN.com. Sign up for it. You want to do it quick before it sells out. It will sell out. And so, and as well, this coming next week, next week, beginning next week, the 28th, beginning on the 28th, we've got 47 pieces of silver, totaling over $1,000 that we'll be giving away. If you go to the homepage at TFNN.com, you can sign up for that as well. Now, if you are listening to us on the radio or you are listening on your mobile device, remember you can always catch this show here archived on Channel 10, or you can watch it streaming live to you, and you can do that by going to the homepage of TFNN.com. Over on the right-hand side, you'll see 3 little phones. Click on it, and you'll be able to catch this show streaming live. What I've got in the my charts that we're looking at right now, I've got 4 quadrants. We're looking at the futures contracts. It's the 30-minute futures contracts out here. In the upper left, we've got the ES Mini. That's the S&P 500 futures. In the right, we've got the Dow futures. In the upper right, I should say. The bottom right is the Russell 2000, and in the bottom left is the NASDAQ. Now, what we're watching here, you've got price, you've got volume on this, and you've got the relative strength indicator on each. Well, I guess you don't have volume on the Dow futures out here. I can add that in. There we go. Now we've got all of them looking about right. And as we take a look at it, what you can see here is the ES Mini moving up into the overbought territory. The Dow futures also moving up into the overbought territory. In fact, the Dow and the Russell 2000 being the two most on the 30-minute chart, being most overbought, and you've got NASDAQ futures moving up to that level as well. What does that mean here? It says we should start to see here within the next, these are 30-minute charts that we're looking at. You should start to see the market start to move sideways, work that condition off, either work sideways or pull back, and you want to be paying attention to volume patterns and candle patterns that are out there. Doesn't mean it starts here right now, but it does help you to understand where you're at in the market. If you are buying or selling, looking to enter, into a position, what you want to do is these are your friends out here. Your friends using these indicators as well. You want to be looking to buy from the bottom level, which is in that 30% range. You want to be looking to sell when it gets into the 70% range. And you want to either buy or sell when you see the candle patterns that go ahead and confirm for you. And it works like all the time. So you want to make sure that you're using it. You can utilize the futures contracts if you like to trade like the TNA and the TZA, where you want to be making your decisions from here is you want to go ahead and make sure you got the Russell 2000 futures up there, and you want to be able to look for a divergent pattern. Well, you want to look for whatever patterns it is that you would trade out here, even if it is simple as going ahead and trying to fire away to buy when you are down at the low level of that RSI on the Russell 2000 futures. Oh, it's got the 10-minute. I got the 10-minute up on the Russell. My apology. Let me just change that here to the 30-minute. I like to be consistent. And I see some other patterns that are out there. Well, it's still on the 30-minute. It also is in the overbought territory as well. Let's go take a look at. What do we want to take a look at? How about let's go through the commodities out here. Of course, Larry will be up today. It is Thursday, the commodities hour. So from 12 to 1, he'll be taking a look at it. But let's go take a look at the. Let's first start off with gold. Let's take a look at gold here. Gold coming down and testing. It looks like it's tested the high of the hammer candle from January 4th out there. That number is 1664.50. That is where the bulls really showed up on that trading session. Gold getting down to 1664.20. So, in fact, they have tagged that level. That has 143,000 contracts out there. Was it 143? 143. This is the continuous versus 126 today. Did get a bearish engulfing yesterday. You're having follow through today. Of course, we know where the bulls and bears are lined up. Real good support on gold is going to be that 1626. You do not want to see 1626 taken out. If you take a look at what is the retracement here, just off of its most recent move from low to high, we would come take a look at it, and what it's done is a 0.382 retracement as it came into the top of that hammer candle. We take a look at silver. Let's look at silver next, see what it is doing. Silver today forming at this stage an evening star reversal pattern, having made it up to the 0.618 level. And the 618 level, sweet 618 that I'm referring to, is the C to D leg. That is off of the swing point high from November 29th down to the January 4th low. Not a hammer candle, but very close to it on January 4th out there. Right now, you've got the, I've got the 20 and the 50-day moving average up here, and it is the 50-day right now that is holding silver. If we take a look at the retracement thus far today, this has not made it back to the 0.382 level. Silver stronger than gold as we speak. 877-927-6648. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow up 63, S&P up 4. Across the pond, the DAX up 36 points, the FTSE up 67. Let's go to Erie, Pennsylvania. Marie, thanks for calling. Thanks for holding. How are you?
Oh, we're doing fine.
Oh, that's great. You staying nice and warm up there?
Oh, trying to. We're very fortunate because the lake moderates things for us, but we're still cold.
Okay, good. Has it been a snowy season? Do you get much snow up in Erie?
Oh, yeah, we get lots because of the lake effect.
Okay.
Where the cold wind comes across the warm lake and dumps snow on us.
Okay, and how's this year been for you?
Actually, we're a little behind on snow.
Okay.
And last year we were very behind, so we're due for snow, but I don't know if we're going to get it. It's getting kind of late in the winter already.
No, it's only the end of January.
That's getting a little late in the winter.
Is it? Oh, okay. Yeah. All right. You wanted to take a look at Stillwater Mining?
Yeah, I'm in Stillwater. I bought it down around 10.
Okay.
And I was trying to figure out whether I hang on for a long term and just have a wide stop, or because it didn't have enough volume when it crossed the last high in September.
Yeah, and so you're referring to September 14th high, and
Right.
folks, so we're looking at the ticker symbol is SWC, and what Maria's looking at is that September 14th high, which is 1407, had 5.5 million shares, and it just recently broke above that. And when it broke above it, it did it with 2 million, 3 million, 1 million. So it has not had the volume as it broke that level. And today, what it's done, it's come back into the bottom of that range, meaning it's back below the September 14th high, which is 1407. It gapped down this morning, trading at 1363. Volume so far is 902,000 shares today after doing 2.2 million, 2.3 million as it made those highs out there. So your question is, is this should you hold it from a long-term standpoint? This has, as you're probably looking at on the charts, you've got this volume bar on December the 13th, is that it? Yeah, December the 13th, which has 15 million shares. So the problem is, potential problem, is that your price spread there is 1185 to 1216. Not exactly wide price spread. Those candles always worry me a little bit. Because when you see accelerated volume, you like to see wider price spread than that. But that should be support for you. There is a little open window just below that at the 1180 mark from December 11th, which was tested. And the question is, it seems to me like it's likely headed back, because it got into the overbought condition. Now you had a dark cloud cover candle. Today you've got a gap down, so now you've got confirmation that it wants to back off. And, the question is, where is it going to move down to? And so you've got to determine just exactly how much pain it is that you're willing to take, and what your original, when you made the original trade, have things changed at all from that point in time?
Well, I've been, silver is strong, which they mine, but they also mine palladium, which has also been strong. And I expect that to get stronger. I'm not sure if they are the best company for palladium, but they're certainly one of them, and there aren't many companies that do palladium.
Sure. If chart patterns repeat themselves, and so this is where, you're dealing with fundamentals versus chart patterns.
Right.
And so, right now my focus for you is really chart patterns. And so the last time, and you picked it out, which was September 14th. So if we take a look at the chart pattern on this, September 14th, it makes a high, does it with volume, so that was a nice thing, and also moved into the overbought territory. In fact, the level that it attained on the 14th as it peaked out there was at 83.57. That's kind of in your extreme level. Then what it did here, it got up to 80.81 on January 22nd out there. And last time, meaning going back to September 14th, you had this little bear sash candle out here. You had follow through on the next trading session. And then it made an A to B equals CD down, it looks like. The A point being the September 14th high, your B point being September 26th, a retracement up into October 5th. Didn't make a full one-to-one A to B equals CD, but it did get pretty close to it. That extension would have been 970. Looks like it only got down to a price point of 1034. And as it was moving down there, it was moving down, getting into kind of the oversold condition before it started its move up. So, if I were you, how I would, so if chart patterns complete, in fact, I'll go a little bit further left on the chart. Let's take a look at the next time that this thing gets into the oversold territory and what kind of candle patterns it makes. Well, Marie, that takes you back to February 29, 2012. It gets up to a high of 1420, does it with 3.8 million shares, creates a bearish engulfing candle. That's when it was also last at the getting close to the overbought territory, and pulls back a bit. Let me see the next time that it does it. Well, the next time, if I would take a look at the chart patterns back in July of 2011, gets into the RSI reading of 73, creates a bear separating line, and a big one with volume coming off the top here. Now, that was a big signature in July of 2011, but of course it moves down. So this has a pattern of getting up to these highs, these extreme levels, and then at least backing off. And the only thing you want to be paying attention to, and the gap down means a lot today. So gapping down, gaps on equities, they mean a lot. Volume-wise, maybe that's what you really pay attention to today. 920,000 shares. If this thing starts really picking up volume, let's say more than 2 million shares, it most certainly wants to come back and at least test out that 1216 to 1185 level.
Okay, that's. I wasn't sure what to make of that high volume, but short.
And it's a tough one. It's those sessions are the ones that I struggle with most. Now, the way that you play them is you be very careful and watch where price is. So the bottom of that candle, it never closed below it, which was a positive. That was a bullish sign for you. And once you got above it, you kind of feel like you're somewhat out of the woods here. But it's going to come down, and I think it's going to come down and test that area.
Yeah, I've been in and out of Stillwater a long time, and it does have a habit of it gets to a high and then falls apart.
Yeah, and that's where if you kind of put these different indicators together and you combine it with the candles, and look, you and I, we don't know what it's going to do tomorrow. But if we go back and we take a look at the past, and you believe that chart patterns will repeat themselves, then you just kind of use those probabilities. From a longer-term trade, there's nothing wrong with taking profits. And if it pulls back, going ahead and buying back into it when it meets your parameters. Likewise, if it decides to take off tomorrow, the opportunity cost may have been small just to jump back in on the train.
Yeah.
So you've got to use the money management skills that work best for you. That's what you have to do.
Yeah, you always hate to give back too much, though.
That's probably the worst thing. You got opportunity cost, that has some pain, but certainly letting a winner turn into a loser, that's a cardinal sin for sure.
Well, I appreciate your time. Thank you.
I appreciate you calling, and have a great day.
You too.
You bet. Let's go over into the international. Let's take a look at the sectors inside the S&P 500, with the S&P having touched that 1,500 level. And if we take a look at the strong sector, which is the XLF these days, trading out at 1744. This is a weekly chart that we're looking at. The two black lines that you are looking at, that's really kind of the sideways box consolidation range for the most part that it was traveling in. I suppose we could take the bottom really right down to there and really show the consolidation range. And as we take a look at this, you can see it's the weekly chart we're looking at. And as long as it stays above we're going to call it the 1720 level, which is the high from February 18th, 2011, looks like the XLF is trying to break out. Now, from a volume standpoint, it's climbing a wall of worry because it is trading into a big downdraft from October of 2008. That's 2 billion shares on the way down, and we're not even close to it. However, you break out of a consolidation range, what that really does set up is when you do break out of a consolidation range, and I'm not going to ignore the downdraft volume from 2008, but you can, if you want to measure what your potential is, it's from the top of the consolidation down to the bottom. However, is it going to do it right away? No, of course not. But if you take a look at the RSI, you can see on the weekly chart it's up towards those highs. We'll see how this closes out tomorrow. Tomorrow will be very telling on the XLF. And if you take a look at what is the range that the next move would be, if it's a breakout from here, you would be looking at probably the low I would use right around $11 as the low, 17 as the high, so it's got another $6. That says that add that to 17, you're at $23. That is just simply one way of being able to use box ranges or consolidation ranges, whatever the terminology is that you might like to use, to figure out where something would move to the upside or the downside. Now, interestingly enough, we came up with a number of about 23. If you come off of the highs out here in the financial sector back in the 2007 time frame all the way down to the lows, you can see right now it's just trying to at 1819 is just the 0.382 level. Hasn't even been able to do that over all this time out there. However, if you do add $7 to the 17, that I think it was 6 or 7, maybe it was $6 at 23. The 0.618 retracement is $25.79. So it's a logical when and if the financial sector breaks out of this consolidation, just logical that that is where it would travel up to. But you can see here each time, in this case here on the weekly chart, that it gets up into these overbought conditions, it goes ahead as well and either works sideways or goes ahead and pulls back. So that is on the financial sector. Let's go take a look at the technology sector. as well as the energy sector. Let's see which one first pops up. It's the energy sector. So as we take a look at the energy sector, I believe this is it is still trying to deal with the September 14th swing point. That swing point high is 77.35. Let's get rid of now. Now, this was a failed 0.786 Gartley. And failed 0.7. Now, I talk about when a 0.786 Gartley fails, it'll turn into a butterfly. That's also where you've had actually a reversal signal, which we didn't get. This formed a 0.786 Gartley pattern, but never got the reversal pattern out there. So all that this one really needs to do is just do a 100% move of a move, which is a test of that September 14th swing point. As we take a look at the volumes coming into it, let's go ahead and change this to black as well, so it matches the volume along the bottom. You can see as the XLE has moved into this swing point, it's doing it on less volume, and the volume dissipated yesterday. Yesterday did 7 million shares versus the 10 million shares as it moved up into September 14th. Today, though, in the first hour and 15 minutes of trading, 2.6 million shares. The test on this baby is going to be at the 77.35 level. That's the high of September 14th. And again, that has 15 million shares out there. Let's go take a look at the technology sector out here at the XLK. And as we take a look at that, you've got the island reversal pattern here today. That is set up by the gap up from January 22nd and today's gap down. Of course, this has got an island little bottom out here as well as this gap. So right now, the technology sector trading back inside its range here, which is, when I say range, really take a look at the sideways consolidation box pattern from the January 2nd time frame. So it has not broken down, although it has given us a very bearish pattern out here. But quite frankly, until the XLK, and this is a long way down, quite frankly, breaks below the November 23rd level, November 23rd, that's going to be its next support, and that is at the 28.53. It's an area that has been tested in the past out here. So well, it's given us information, and right now, today, even though you got a bearish pattern, the XLK trading up towards the top of its range, and a lot of time left in the trading session. From a daily standpoint, this is not in a overbought condition whatsoever. So this sector does have some room to run to the upside. It's trading more towards the above the 50% level, so it's more bullish than bearish, even though it's got a bearish candle pattern out there today. Just try to put it together for you. Let's go take a look over in the across the globe. Let's take a look at the FTSE here. The FTSE having clearly broken the 1.272 butterfly expansion pattern. I believe when I drew this here, it did not look like it completed the A to B equals CD, the larger one. And that was coming off of the low from June 1st up to the high on the, then we're going to find out if it did, on September 14th, down to the low. And it did not complete that A to B equals CD. That's the larger one. You can still complete a butterfly or a Gartley within a to B equals CD pattern of that C to D leg out there. But it also doesn't look like it completed that as well, because your pattern out here, and let's go take a look at it, coming off of your C point, up to a swing, really, that I would use up here as December 19th, down to low. That's actually completing today. So there's your A to B equals CD pattern that is completing today on that C to D leg. However, looks to me like what the FTSE here wants to do is move up to its next level. That's quite a ways up. That's in about the 60 range. It's trading at 62.66 right now. Of course, this thing is truly in the extreme overbought territory. Just because that looks like where the chart pattern is moving to, this is not, you don't want to buy when things are overbought. You just simply don't want to do it. Just let the chart patterns complete. Maybe play the pullback by going short, or waiting for it to set up your next long move out there. Dow's up 77, S&P's up 5 points, Composite down 3. Quick look in at Apple, it is down $50.81. We'll be right back.
Are
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I said, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Dow is up 80 points right now. S&P up 5. And what I've got up on my screen is the chart of Apple. We know the big volume coming out of Apple in the first 15 minutes of trading. The first 5 minutes was 8.3 million shares. Then we had 4 million shares from the 9:35 to 9:40 session, and to 9:45 another 4.7 million shares. Other than that, volume kind of dissipating here. Of course, what Apple is doing, moved down into that extreme oversold territory. And as we know, when an equity does that, it's got to work that off. It works that off either by moving sideways to slightly up. That's exactly what Apple is doing here as we speak, and probably getting ready to fire away some more bullets to the downside. You know, daily-wise, it is already done. 28 million shares or so, 27.2 million shares in only an hour and 25 minutes of trading. So there's big volume in this equity. It does have some support here, untested support at the last breakout sessions of January 26, but the volume there was 34 million shares. So it's coming into that gap up, that swing point with way too much volume. That level has not been tested. That's in the 443 range. The range is 443 down to the 454 level, and I suspect that is where Apple is headed at a minimum, just at a minimum on the at the interim. But what we do not have here today, and I covered this during the first hour. So if you go to the homepage of TFNN.com and you click on the 9 o'clock show, it may not be up now, but it'll be up here in a bit. You can watch the archive of it. And when I opened up the show here, you know, what I do for my clients is, I always like to do the work. If you do the work, it pays off. And you're always looking for confirming signals out here. In the case of the NDX 100, which I went back, my data took me back to 2002. There have been 11 island reversal candles, and they have a certain pattern. And those patterns as well have confirming signals, which are the other indexes out there. And so you want to be able to put things together. And in the case here, and the nice thing about island reversals, in this case here, it's an abandoned baby top that was created today. The nice thing is that those are usually long-term reversal signals. Now, it's been a little bit different here towards the 2012 timeframe. There's been a number of reversal signals out here. Some have worked better than others, but prior to that, they worked so really well. And this here, this pattern is very rare. It's really rare. We'll see, and it will be a abandoned baby top here if, in fact, the NDX does not close or does not touch. Doesn't matter where it closes, as long as it doesn't touch the 27.56, 59 level. If it touches that, it never turned out to be. That's how rare the pattern, in fact, would be out there. So what you want to do is go back, listen to that 9 o'clock session, because I really started covering it right off of the bat, because I know a lot of folks were wanting to pull the trigger and to go short after the release of Apple's news out there. And all I wanted to do was say, hey, hold your horses here, because if this is a real reversal, if this is a major top that has been put in here, you don't have to worry about trying to sell the top tick. Let the market prove itself to you. And what I say is, and the beautiful thing about trading, charting technology, being able to take a look at candlestick patterns, be able to take a look at any patterns that you might trade that are out there, is that you are just like in Las Vegas, and not from a gambling standpoint, because this is a probability. Would you like to go to Las Vegas and play 21, where the dealer, or blackjack, I should say, where the dealer turns over both cards out there? And then you can, and even if the dealer has both cards, you have the opportunity to take a look at your cards and throw them away. Well, that's what you have in the market if you have patience out there. Even though you might stay in the game, if you take a look at his cards or her cards against yours, that doesn't mean you're going to win every hand out there. That's why you always use proper money management, and you always want those confirming signals. And that, folks, has not happened. In fact, just the opposite. Stay tuned. Basil Chapman will be up next. Then Larry Pesavento, Daryl Martin, David White, Ken Shreve from 3 to 4, and the Tom O'Brien Show from 4 to 6. Thanks so much for joining me, folks. Have a great day. Look forward to seeing you in the morning. Bye-bye now.